Hey everybody, it's Bob Trade Gene's good friend Phil here. We've had two asset classes literally just flying since the middle of September and the end of October, respectively. But they struggled this week. Is the move over or are they going to continue? We're going to show you. Stay tuned.
Trade Genius.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening. Okay, Phil, why don't we throw up the SPY chart here? I'm gonna start off with SPY. We had a really interesting week. I think we finished 0.02% higher from last week to this week. Normally the second week of October, the second week of the month before OPEX, you have a dip in the market. They basically held it flat. There's no bond selling to cause any issues. And now we're confronted with the next 2 weeks being seasonally strong 2 weeks, but we have a bond issuance coming up too. So the Trader's Almanac says, hey, we can go up 0.5%. 3/4 of the time the market's green. The bond sales could be an issue here. So we may end up just having another grinder like we normally do for OPEX, Phil. Friday up, Monday up, Tuesday up, Wednesday, Thursday down, Friday flat. So that's what I'm expecting on the SPY side here. So and then the week after that, I think, we have to kind of stay long on SPY and just, can't really short this market at this point. For those who trade with us, we had a great trade with Marvell long. We had KOS long. We're long 460 calls. There were 458 calls into the 29th. We rolled them up already. And on the short side, we have puts for next Friday 415s because, seasonally it says that you should see some dippage. We didn't get the dippage, so we covered those and turned those into bull put spreads. So that's kind of how we're positioned next week. TLT, I covered at 95 like I said I would. So I have sold calls over that. And that's the only other, I think, fly in the ointment, Phil, is if TLT decides to push down and fill those gaps all the way back down to 89, then the market will probably suffer. And there's some weird things happening in the yen. The yen has turned upside down, literally. Usually when the yen is strong, the market goes down. Well, the yen's been weak. The market was weak. When the yen got strong, the market got strong. So I don't know what the heck's happening with the yen. That's getting all discombobulated. Another correlation broke. But the other one that seems to be just wild is Bitcoin. And it's just been on an absolute tear. And I threw a chart up here but I'm going to let you kind of speak to it because this is more your ballywick. I just pretty much trade it as I see it on my worm, but you also look at different levels here. So if you want to throw up Bitcoin in here and talk about it, I'm going to give you the floor.
Yeah. So basically what we have here is, the trade force indicator obviously took green and then we took a little break in the middle, in the, not quite the middle there, but over to the right before this most recent run up, it flashed green again. But the thing is here that we have to be careful because what I'm going to be looking for is when the signal starts to maybe give us a warning up here on the daily and on some of those higher time frames like the 4-hour, 8-hour, 12-hour. And the reason I'm going to be looking for that is because, and I still think, you have to recognize this is a big macro trend up, right? But all of these moves, they have an ending and then they have either another consolidation period where you're going to be range bound or you're going to top out the move for a while. Historically, we get one more pullback before the halving. And so far, the cycle has been behaving somewhat like the previous ones in terms of where it bottomed, where it started to peak out before the halving. And so we're looking for now, is this going to behave? If it's going to continue to behave, then we got to watch this area here, which is the 50% to 618% retrace. Okay, so if I were to go back on every cycle peak and drawdown that we've had since the beginning, you would find that price either stops right under 50% or right in this zone. Sometimes it even pokes over that 618. So the 618 is at 48,547. The 50% is 42,230. So it's simply just taking a measurement of from the high there to the low. That's that dashed line and retracing either half of it or retracing 61.8% of the move back up. So we're right in the thick of it. And that's why I would be looking for the trade force on the higher time frames to signal a warning. Because, when it comes to these bigger moves, the trade force, I think is the 55 setting, Bob, on those big swing trades, right? that thing is money. And so we start getting a warning sign. And again, I'm gonna be looking for the 8 hour, the 12 hour to kind of, see if it's going to start to warn, and then the daily should follow suit. But we're in that zone. And this chart wise too, we're at a point, this is where Luna broke down. Remember that once Luna and all that stuff started to unwind, and then FTX finished us off. But we're back to those, Bitcoin likes to revisit the areas that we break from, and that's where we're at. So could they take out that swing high there and take out that 618, 48,547? Absolutely they could. We just don't know. But what we do know is that if it's going to top out and start to roll over and make a lower high, we're going to start seeing it in the indicators. And all I can tell you is that historically, that probably produces at least a 20% pullback, if not more. And then we'll look for a dip. We also have to look at the macro, because we know the flows are going to be weaker after January, right? And Bitcoin is, if you overlay the S&P 500 over Bitcoin, they kind of rhyme, right? So if we do start to roll over, or if there is a recession, finally that we get the numbers for, and the 210 yield curve, the 2-year, the 10-year yield curve goes positive, that's also a confirmation of recession. Those are the things we'd have to be looking at in the macro to be like, okay, is this going to pull back further, or are we going to find support now? And because we now have support at 30K, we now have support at 25K. Those are big support levels now, that if the bears are going to get angry, they're going to have to chew through that support now. And it's been, 30K has been worked on for a while here. So that's going to be a key level now going forward. But if you do lose 30K, you're going to go to 25. I don't know that 25 holds again, because it held for quite a bit there. And so I think it's as simple as that. If we do break above 61.8, then you start having to look at these highs that we came from, right? Everyone's going to be gunning for all-time highs. If we start clearing 48,500, that's, the market's just going to be looking sky high. So, that's a level that's important. If we break above it and then fall back in, that's super bearish. So if we do have that breakout, you don't want to break back under that 618 at that point. You want to run. Otherwise, it's a bull trap, and we're going to pull back in. So, Bitcoin's very volatile. You have to have these scenarios running in your head, and you have to be ready for them if you're actively trading this market.
Yeah, and Phil, can we go back to SPY for a little bit? Because I want to talk the FIB levels a little quick. I kind of glossed over that. So if you notice, this SPY's acting very mathematically correct. In fact, this whole year, SPY's been very mathematical. And so we had a retrace down, I think a 1/3 retrace of the bottom that we had there was at the July or June bottom. And then we went ahead and we now double top. SPX broke July high and pulled back a little bit, Phil, into the close. So, assuming that we break through here, the next stop for SPY is 480. And if we get a blow off, we're looking at 507 here, coming up, if you just look at the math on it. I personally think 480 is kind of in the bag over the next 2 weeks, but we still may pull back a little bit ahead of that. And, I have to look, you have to give props to the quant guys who've been following these flows, and they abate in January. So you can't really get too short until that time frame, even though not everything's going up. You notice, they've killed oil, they've killed natural gas, they've killed the a gold trade for now and a silver trade for now on new highs. So, you can hit these touch points and, like touching a stove and get a reaction down. So, but I'm just telling you where we are, still Phil and I are still very, very, very bearish, but, I'm happy to be long for 4 or 5 weeks on SPY to catch the move as I'm raising cash and adding to my bond positions here. So, look, if they can't recover oil, recession's in the bag, and this whole thing is going to come crashing down here in 2024.
Yeah. So you just have to be careful. Enjoy the pumps while they happen, but we have to be cognizant that we should be looking at hedging, over the next, I would, give it another 4 weeks or so. At that point, you have to start looking at below you here. But a great finish to the year. I think it's a blessing that this year was up as much as it was. Just remember, guys, statistically, when we have like a 10% up year, January is always negative. So that's why we're thinking we might have a push, year end into new year push. That's very common, but that last 2 weeks in January can get really rocky really fast. So if you're looking to like cap gains or protect profits, that's the spot. That's the area to look at that. So anyway, guys, let us know your thoughts on what we presented here. Great run so far on all these assets, but we're getting into some interesting spots here where we've been running since the beginning of the year. That's a great 12-month run, but at some point you're going to have a larger pullback, and we think that's coming pretty quick. So let us know your thoughts on all that. Thanks for watching. Check out our specials over at tradegenius.co for swing trading. You can't miss the Trade Force indicator, doing a great job capturing the moves in these markets. So head over there, check out those specials, and we'll see you guys in tomorrow's video. Have a great weekend. Take care.
Trade Genius.